Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, and we are at the 16th of December, 2020, just after 6:35 p.m. So there's two elephants in the room, and one of them is gently walking away. That first one that's walking away is the Fed. And the Fed had its FOMC meeting and the press conference, and very simply, the Fed did absolutely nothing. There was no extension of programs. I guess you could say they're keeping the swap lines in place for a set of foreign currencies through September. But if you're asking, did they tweak their bond buying or their mortgage security program purchases? No. Did they say they're going further out to control curve yields? No, they didn't do any of that either. Did the Fed say all the same things it said before? It did. Did it reiterate it still has more tools in its toolbox? It said it did. Is the Fed concerned about the pandemic? It says it is. What was the vote? 10-0. The closest we see an interest rate hike is one member voted that he can see one coming in 2022. None voted that they see an interest rate hike coming in 2021. So that leaves the market to test the will of the Fed. And what do I mean by that? Well, if the marketplace thinks that the economies are going to get better and that things are just going to keep marching along, well, then you got to consider, if they push the market, what does the Fed do to keep those longer term rates down? We'll know if and when that happens. Does it look like you might go to 1% in the 10-year? Yeah, I don't see why not. I don't see anything bearish right there. And I think if they throw out another COVID bill, the market will look at that as bearish the dollar index. And I expect that COVID bill to come this week. And that might be the trigger, but we'll see that in charts. In any case, when you go to the S&P 500 on the weekly chart, you're at an all-time high, and you are up right now on a weekly basis. If you were to finish trading for the week right now, up 42 handles for the week. When you look at the chart action, you can see that you've been here, been doing this, and you're playing that sideways action in an uptrend. With the action today, you confirmed higher lows, higher highs, bullish. The market is trading over the 18-day average of closes, bullish. The resistance in the market is 37, let's call it 22, and the slow stochastic reading is overbought. That is the one element that's got me bugged. That's a pretty overbought condition. It's not trying to embed yet. And between where you're at and that range to the upper Bollinger Band, you got about 20 points to play. That doesn't mean you can't embed, but will you embed by the end of this week? No. You're going to have to wait until Monday in a perfect world to see if the market went up each day. Would it embed? And that's what you're forced to wait for. So for me, okay, it's fun to watch, but that's about it. The NASDAQ also has one of these not the best looking pictures. It's bullish because it's kept the bias up. It stayed over the 18-day average this whole time. Corrections to approximately that number, they've held real well. And the resistance point is the upper Bollinger Band of 12,821. You're overbought, but in this market, you have both numbers. You can't count tonight, remember, because we don't know how this is going to finish up. We have both numbers, though Wednesday were over 80, not the day before. So if you finished up today like that and you were up strong on Friday, you'd get that embedded reading, which would change the nature of the chart action, in my opinion. And as I said, you know, I've been doing that ho, ho, ho. I think Santa's coming to town for you through the end of the year, and I haven't changed my opinion on that. I like that ho, ho, ho. I used to do that for my nieces and nephews. My wife would make me call up, and I'd have to pretend that I was Santa. And of course, they were very young at that point. They believed it. As you can see, overbought conditions, sideways action, but everything's still bullish other than overbought. The Russell's got the embedded reading. It is the sweetheart of the markets. As I said yesterday, I thought that if you got up to the upper Bollinger Band, that you'd run into some resistance. It's exactly what you hit. You got up yesterday to it, saw the resistance, challenge it today, thrown back again. Not a surprise. That's what bull markets do. They'll stay within the confines. They hit it, they back away from it. In the VIX, you can probably go back to this 18-day average. Here's what the VIX has done. It's established a new range, and you've got to pay attention to those. This 40 is too high. It reminds me of what we did when we had that. And now it's coming in, and instead of doing what it did last year when we were in the low teens is the range, we've come up about 6 full points from there, and we're drifting sideways. The pattern is one of bullishness with momentum pointing down, but is it bullish? You really have a higher lows and then lower highs. You're as neutral as you can be in this. In the T-bond market, as I said, I think the bears took control at the end of the day with the Fed. You now have lower highs, lower lows with today. You're getting a bounce. I think the bears are going to press the market into the 173.10 zone to make them scared. You got to take out, in fact, maybe throw in the towel. You'd have to get up to the 174 level on this formation. I don't see that in the notes yet. The notes have to close under 137.26 for this to occur, and I'd like to see momentum flash to the downside if I'm going to be bearish. It hasn't done it, so I'll call that market neutral. I'm bearish on the dollar index still. The market isn't bouncing away from these new lows that it's made. You got down to 90.04 today. You're not giving much of a bounce from there. And so far, I haven't seen anything that'll make it bounce. The Fed's certainly not coming to its rescue, and the market's been interpreting that COVID relief bills is more spending is bearish the dollar. In the eurocurrency, it's the flip-flop of all that. It gets the benefit of all this. It's staying bullish. Higher lows, higher highs, the bullish embedded reading. The 123 area is the next resistance point. British pound, well, we'll find out if the Brits can make their deal. Now, the banks, I think the Bank of England meets this week, too. It could be Thursday or Friday. I forgot myself, but I'm pretty sure they meet. Higher lows, higher highs, into the resistance, but why play? And I've said this over and over, that vehicle. Bitcoin, bye-bye. Thank you, PayPal, and the other groups that have said they're going to accept this and roll it into a payment type vehicle, and that just accelerated the move. This pretty much came out of nowhere. If you were to look at that chart action right there, the resistance is certainly 20,400, and the market stepped on that like it didn't exist, but don't worry. I'll bet you pull back under the Bollinger Band fairly soon. In the Brent versus WTI crude, once again, this market could care less what the daily fundamentals are. If you looked at the EIA numbers, they are not bullish for this time of the year. Didn't matter. It didn't matter that the refinery rate fell. That's normally bearish too. If that's falling, it means the refineries aren't buying as much oil, right? That didn't matter. Market is staying in all of these strong because this market's saying, I see the Moderna, I see COVID, the Pfizer BioNTech, and I see other countries are getting ready. It's looking down the road. That's what it's doing. Okay, we'll see how long that can go. I never fight anything. I stay with the chart. Mentally, it's one thing to understand the game. Leave that on your desk when you make a trade. When you think you've got it figured out from the fundamentals, you probably have overthought. Just keep your eye on what the market's doing until it loses the embedded reading. It's bullish. It's being bought on breaks. Next resistance, 51.58. Same thing with WTI oil. Next resistance, 48.57. I think the pros are still buying these markets. Heating oil, same thing. New York, welcome to 10 inches plus of snow. You may wake up with 14 or so because I think you're snowing at the rate of 3 inches an hour you're accumulating. Whoa. And Pennsylvania, I can go on and on. Natural gas, it's watching this. It threw out its first interim from what I'm seeing, just now a buy signal. Now you got higher lows, and if it can stay over the 18-day average, it's a buy signal. It's got to prove it can do that. If it does, layers of resistance all the way up to the $3 level. But it's the first time since this whole thing happened from up here that we've had an actual buy signal starting to develop. And I told you, the first time it gets cold, winter comes, be careful, and that's where that bottom seems to have formed in. So I do want to remind you of the things that I do. You know, in the morning at 5:40 each morning, I record a video for my subscribers. In it, I cover all the futures markets in a very certain way. First, I wake you up. Hello, here's the video. It'll come in via an email first, alerting you that it's there. And I'm covering already what's going on in Asia. I'll tell you what's been going on in Europe, if there's anything important there, and then lead you into what's the U.S. reports. In my written updates, which I put out about 11:30 in the morning, that's a different level of the service. I also cover in writing a lot more, but I get you going at that hour. Remember, after I put that out at 5:40, there's a lot of events happening up until 11:30. So you get the news. Then you get me covering these markets in this way, 40 charts, and there's a scroll bar you can pull on the bottom. And in that scroll bar, what it does, you can just drop in the section you want, or you can listen to the whole thing. The price, it's very inexpensive. $7.95 for 30 days. Now, if you want to buy 1 year up front for the next 48 hours, that's when this special Cyber Week deal is over, you get my charting course for free, and you can take it when you want. Today, the course costs now $249.95. Go on the website. I told you I was going to raise the price. I decided to do it quicker. And that's what I wanted to sell it. I think it's still a great deal at $1,000. I really believe that. I mean, people that take it, I've yet to have anybody take it and say it's a really crappy course. And I've been doing this course thing for a couple of, I'm guessing, 25 years? So that's where it goes. You know, I'm sure somebody hates it. They just want to be nice to me. But in any case, so you get that free. It includes 6 hours of videos, the charting software, an $80 value, my full research package, so you can sample it during that as well. It's a great deal. But you have to buy a 1 year subscription to any research package to get that. Anything you buy, it's a great value because you're getting the course, the charting software, and all my other goodies. It ends Friday. So take advantage or say goodbye to it this year. In any case, I won't be doing it. It'll be another, to give the course away free. If I do it again, and I don't know if I will or won't, it would be a long way down the road. It would be a year down the road. If I do it again, next time I might charge a minor fee. Go to www.iraepstein.com. It'll tell you about the course under education, and under the research, everything's explained there. In the meantime, I'm going to get a good night's sleep. And I am going to be waiting to put on a lot of trading, because now that this is all coming to a head, to me, you got a window of opportunity now between now and Christmas Day. I'm Ira Epstein. Take care.